All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Lots going on this afternoon, and a lot of different things are happening. I really like some of the price action that's out there overall, and it's very interesting to hear Kudlow speaking at the White House right now and talking about trade deal. Bottom line is U.S. President Trump and Chinese Premier, they're going to meet for dinner on Saturday night, and until then there's going to be a lot of speculation, and after that there's going to be a lot of speculation, and we could be talking about a pretty monster gap come Monday morning in the overall market. Now, this morning I took off my Apple share or my Apple contracts, and I may get back into them before the close here today. But Apple made this move here on the minute chart where it took this nice little blip up and then this heavy down, breaking some of the lows that it had set, this 173.40. And I had to go because the flush risk just increased by then. And I kind of just wrote on my notes, okay, you know what? I'm going to leave. If it's able to close back above this level, I'll look to get back in. And you can see for now, it's above that level. It's about 60 cents above that level. We're not seeing the option values change all that much. But my biggest concern with Apple is just a lack of movement more than anything. Now, I think when it comes to Apple, there's greater chance for movement than other things that are out there. But lack of movement is sure killing options across the board. This implied volatility crush that we talked about yesterday, has been ongoing and has been very strong here. And, that's only going to continue if we see more days in the market like today. Because the average true range on the market is what? Right? The average true range that this market has been in, let me pull it up here. Here's the SPY, has been, 4.5 points a day, right? 4.3 points a day, so 43 points on the SPY per day. And what's it moved today, right? From top to bottom, what's its range been, here on the S&P? Well, since the open of the market, it hit a low here of 26.56, and it's at 26.77, so 21 points. Right? I mean, half of what the range has, the average range has been. What's going to happen to implied volatilities on options to stocks when that happens? They're going to get crushed. You take something like Apple, right? Yeah, it's moved today, and I know for some it's moved a ton because, they were in it. But, $3.50 is what Apple has moved today from low to high, right? It's been $3.50. What's Apple's average true range been over the last little while? It's been $6.40. Apple has moved half of what its average movement has been over the last 2 weeks. And we're seeing this in a lot of names out there. And what's going to happen to the option values when the average true range comes down? Those option values are going to get compressed. Now, when those average true ranges start to come down, it also tends to be a bullish signal. It tends to suggest that path of least resistance is going to be higher, right? And so I think that's, there's still that kind of contradiction where for option traders like myself, where it's like, yep, path of least resistance higher, but how much implied volatility am I going to give up here on my options? With my 4 trades so far, this challenge, with the 4 trades, Pepsi, Under Armour, FedEx, and Apple, I've lost a total of $800. And I haven't put a ton into each trade, but a total of $800 just due to implied volatility. That has nothing to do with how the stock has moved, has nothing to do with time decay, has nothing to do with anything. Down $800 due to the implied volatility. Now, we've had some delta to overcome that. We're down $250. Okay, great. We continue, but we're not taking that full-on implied volatility loss. But if we look at the implied volatility loss plus the time decay loss, it's a pretty treacherous environment from an option trading standpoint. Even something like an Under Armour yesterday that I was kind of, you may have sensed it when I got on video. I was disappointed that I got out. I did not want to have to get out. I wanted to be able to trade this and play this higher, but it wasn't there. You know, it wasn't there, and I had to take it, move on. Just didn't have enough volume. The odds not in my favor, and I knew, okay, you know what? If it pulls back, what's going to happen to the options? They're going to get crushed, and I did not want to be in that environment. So, you know, it's not just a matter of signals and direction. It's a matter of magnitude of direction, and right now, options are pricing in greater magnitude of change than what things are changing at the moment. And that is something where, compression kills, and something that I absolutely have to be careful with when it comes to options. And it's something that I have to be careful when I go and I look at a stock like a Pepsi, right? And I talked about wanting to play this lower. You know, I got a nice little bear signal right here. But the options on this day, and now what they are today, right? I mean, the stock hasn't moved. There's no volume. It's not changing its stripes or anything like that, right? But 4 days of just, little chunk down, little chunk up of $1 range, we could come in and look at the options. And let's just take something like the 116s, which is the price level, that it's been chunking around here over the last 4 days. And if we just come into, let's see, a 30-minute chart, Tuesday, Monday, Friday of last week, right? I mean, this thing was going for $1.75, up here $1.75. And without the stock really moving, it's at about $1.30. And that's the calls, right? That's the calls, and the stock's gone up since then. And these options have gone down sizably on a percentage basis. Can you imagine buying it for $1.70, $1.60? Today it's $1.30, and the stock is pretty much at the same level. Actually, the stock's a little bit higher than what it was. And this is happening across the board. We're not talking about 5% differentials or even 10% differentials. In many cases, it's 20 and 30% differentials, and that is normal at these times, right? But it's also why bottom picking, when you're just using straight call options, doesn't always pay. Generally, you really start to get the much better option values once you get that first thrust up and then a higher low come in. And option values are significantly better now than what they were right back here. But because of the pace of this movement lower, they have expanded to a much greater degree than we will typically see on a little bit of a higher low. And so, anyway, that is just a challenge that all option traders are dealing with. Directional option traders, and there's ways around it. Spreads. That's an easy way around it. Just deal with spreads, or deal with puts, right? Because if you're right on puts, then the implied volatility isn't going to go down. The implied volatility is going to go up. Problem, though, is if you're wrong in your direction, you're going to lose due to delta and due to implied volatility, right? So it's going to remain that way for a little while. That's not going to go away. It's not going to go away before the end of this week. Especially with some of the trade war talk and whatnot, and you'll see me kind of continue to trade the way that I have, you could argue I've been very light and very, I've made 4 trades, which is a little faster pace than what most challenges are by this point. But it's something where I'll have to stay nimble and concerned about the implied volatilities that are out there and what they mean for the stock and the direction or the value of the option here. Okay, but I'll be looking at these apples again here before the close, especially if Apple's able to go green. And looking to see if I can't nibble back in there and get back in. But the Qs are also in a very interesting spot right here. And we've seen some relative strength out of the Qs here today, which we just haven't seen very often. And you look at things like a Micron, today. We talked about this one this morning, outperforming early. Intel, but again, you have the compression. You have the Bollingers, compressing here with them. Ideally, from an upside trade standpoint, I'd love to see the market, stay here or, close a little bit lower into the close, then have a small gap up. I think, we'd be able to buy some things like an Under Armour or something of that nature. But on a put standpoint, very few stocks have broken below yesterday's lows, right? And we haven't seen the market itself break below yesterday's lows. So there's no put confirmation here to say, hey, you know what, bet this market to drop and to drop big. And then you look at the volume. And that volume is nothing. There were some higher elevated volumes on the open this morning. But since then, it has been very, very low volume, which, tends to say, hey, you know what, this move isn't significant. But it also tends to favor the bulls in terms of progression up. Just the progression up tends to be slow paced, in that type of situation. So that's what the market, or that's what we're seeing in the market right now. We have a few kind of 3-7 crossovers out there in the market right now. If you take a look at something like a Microsoft, it has the 3 and the 7 day moving average crossing up. It's not a KD signal the way that it sits. This pullback was too dramatic to have the first crossover be a KD signal. Twitter could qualify as a KD signal today. We'll see where it closes, but it does need to close higher than where it is now. But Twitter has that 3-7 crossover action associated to it. But perhaps the most bullish area, just from a pure chart and technical standpoint out there in the market today, are some of these healthcares. UNH. It has the 3-7 crossover. It's not a KD signal, but it has that 3-7 crossover action. Aetna, one of the very few stocks setting new highs today. I mean, we have a market that's how close to its lows of the year? And Aetna setting new highs today? That is typically a recipe for not just higher, but substantially higher. It's one of these gaps, like right now. Let me get this color back. There we go. It's like this gap right back here in August. And, you get the gap up and it futzes around a little bit, but ultimately that path of least resistance is significantly higher. And, this is one of the most bullish charts out there. But Aetna, UNH, you can come into something like a Humana and it's nowhere near as good, right? It's some of these other, it's some of the more stable, some of the more, the more known quantities within the space that are moving up nicely. But, Aetna and UNH, very nice action on them overall. If you look at the options on UNH, they're pretty high, in terms of the delta relative to the option price. The delta is 10% of the option price. So essentially, I need a $10 move on UNH to double my money. Now, it doesn't work out exactly that way, but a rough estimate. So I needed to go basically to 280, just under 280 to double my money. That's a new high. Do I want to bet on that in this market? I'm not too keen. I'm not too keen on making that type of a bet here just yet. But I could come in a little shorter term and make that, but then your spreads are pretty outrageous and, spread in and spread out. So it's, does make that a little bit of a difficult endeavor. Bullishness, though, is tempered when I look at the financials today. They were leading this morning and are lagging this afternoon. They have this nice action where, we get this island reversal right here. We have this island reversal right down here with the financials where gap down, gap up, beautiful bullish island reversal. Move on up. Now we come up and we get a higher low on an island reversal. Right? I mean, that is classic higher low, and we're getting it on the same type of price action. is it ready to go? If you look at options within the space here today in the financial sector, it's been compression. They're going through that same compression. And so I look at Bank of America and I say, you know what? Bank of America would be really interesting. I'd love to play some Bank of America higher. Is this something that can, and I clicked the wrong button here, but is this something that can, do well, over time here? And if you look at the options, and let's come in here to 1 minute, right? You can see that, the options since yesterday morning, even though the stock is higher, the options are pretty much about the same level there. So, it just is one of those where you say, man, can I really, take advantage of anything? And then if you're bearish and you're looking for something to say, you know what, this is why I'm going to be bearish, small caps lagging. Small caps are lagging here today. Now, again, it's not on volume. It's not to a degree that is directional, but we do see them. We do see them lagging. So, bottom line is, I look at this from a trade standpoint for the challenge, right? I look at this and I go, okay, plenty of cash. Let's go. Market is neutral. There's not a lot of signals, and option prices are pretty insane. So, I better be convinced that something is ready to move. And it's one of the reasons I go back to Apple. Because as far as stocks go that are going to move, Apple's going to move. Apple is not going to sit at 173 for 4 days. Apple is going to move. Is it going to move enough to offset, to offset the implied volatility? I think so. I think it has a better chance of doing it than others because of how oversold it is. And so seeing it snap one way or the other, and then seeing the bad news basically come out on it and the sellers basically go away. Yes, I know it gapped down, but it has been mostly buying pressure today. And if you look at the volume, it's not like volume on a lot of other things. There's good volume here. So I look at Apple, I say, okay, as far as probability of movement, Apple is much higher in terms of probability of movement. And if we look at an hourly chart, right, which is what I want. I got out when it broke back below the 7-hour right here earlier today. We have the bands compressing here. We have the stochastic starting to push on down. All right, you know what? I'll wait for that next little signal or pull back to 172 and back above the 7-hour moving average, and just wait for a similar signal to what I got when I entered the position in the first place. But, when you look at the hourly chart on Apple, we've come out of the oversold condition, so that's not there anymore. But we do have some positive divergences when it comes to things like the MACD or momentum oscillators. Here with Apple, you'll notice here on the MACD has pretty much been the same level on each one of these lows, right? And, that does suggest that, the next bounce is going to be stronger than the prior bounce. The prior bounce was, about $8 right here. Okay. So far, this bounce has been $2. And so if you're expecting it to be stronger than the prior bounce, well, you're talking about 180, 182 coming into play, and seeing this gap right back here from middle November being retested. And so that's what I'm looking at. That's what I'm looking for here with Apple. And, again, just trying to find a good entry point, and one that I'm comfortable with an option that, has good reward potential and not just risk, like a lot of the options that are out there in the market today. Okay. I'll make a decision before the close today, probably in the last half hour, okay? An alert will go out if I do jump in. But outside of that, I'm not looking to jump in anything else. So I may go grab about 1,000 worth of Apple. And run from there. The last thing, sorry, just looking at my notes, the last thing I wanted to bring up was Tesla. Tesla is down pretty good here today and has rallied all the way back. Yesterday, bounce off the lower band, nice little move up. Today, rallying back after it gapped down. Very interesting. Very bullish price action for Tesla here. The implied volatility is pretty insane. I'm not going to make the trade for the challenge because I don't want to put 1,600 into an option right now. So it's just one of those where the options are out of my price range for now. Same reason why at Amazon, but very interesting price action to say the least there when it comes to Tesla, what Tesla is doing here today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.